Welcome back to Just Ask George. I'm David Wolf, affiliate banker with BH Capital Limited, joined, as always, by George Lovato Jr.
The Dude.
The Dude, the founder of BH Capital Limited.
I think Jeff Bridges made that a sort of an icon title, being The Dude in The Big Lebowski. Do you remember that?
The Big Lebowski is not a film I've seen.
See, there's another one you have.
We need to have a whole
life here.
We need to, well, you know, becoming less and less sheltered as we explore the world of structured finance with George, of course, one of the great thinkers in the space, as opposed to a great thinker in space.
In space.
And speaking of space, we love this segment. It's called Stupid Without a License. It's a recurring segment on Just Ask George. You have a story to tell, but before you start, please, this is brought to you by the Opportunity Engine. What is the Opportunity Engine?
The Opportunity Engine is a B2B tool to reach out and touch and generate relevant leads, relevant contacts, tell your story out over the World Wide Web.
And it's a little different than most internet marketing systems.
Much different. All kinds of different filtering. There's an entire new technological system behind it. The Opportunity Engine is really a fabulous tool for business professionals looking to reach out and touch potential new clients. That's exactly what it does.
And for more information about that, bhcapital.com, bhcapitallimited.com, or they can go to the Opportunity Engine website, right?
OpportunityEngineInc.net.
There it is.
bhcapitalltd.com.
Thank you for nailing those, George.
Get those right in there.
Stupid Without a License. You've got a story to tell.
Yes, as I've said before, this is going to come out in an ebook, 10 really funny stories. But I actually dumped a story this week in favor of the story I'm going to tell you right now.
Oh, beautiful.
This is just unbelievable. I have a client. I'm passively involved in this transaction.
Okay.
I shouldn't say passively. It wasn't my original client. Another colleague of mine came to me and said he needed some assistance with it. $30 million construction loan, condominiums positioned uniquely in a certain part of the United States. And my colleague was having difficulties with his lending resources. Mm-hmm. And none of them, he was sort of getting half pregnant with all of them. They'd get up the hill and they'd say, well, we really can't do this loan, and it's a construction loan. And were they
built? I'm sorry, George, to interrupt. What types of construction?
This is a condominium complex.
I'm sorry, condominium. I may have missed that. Okay.
And 60% of them are already sold.
Okay.
And the money's in escrow. The contracts are in escrow.
All right.
And that 60% equals about 85% of the gross amount of the construction loan.
Okay.
So he calls me on the phone and he says, I need you to help jump in here and give me a hand. I said, okay, fine. I said, listen, I've got contact with a new bank, but let's just give them a try. If we don't like the way they rebound this back, then we'll put a participation together with the existing group that he's already familiar with, of my compadres. So I contact this bank, and I just can't make it any clearer how this came down. I get this young banker, and he's been around this particular community for a while, but he's not the sharpest pencil in the box. It's clear to me that he's more than a newbie. Okay. So I said, look, here's the deal. It's a $30 million construction loan. Okay. Build time is around 14 to 16 months. Mm-hmm. And there's 60% of all the condominiums in the condominium complex are already sold. And that equals 85% of the gross amount of the construction loan.
Got it.
Including fees, all in.
Really?
Everything. Boom.
So these pre-sales have almost nailed it short of 15%.
Exactly. So when the construction's complete, there'll be a little carryover for probably another 18 months. But then that'll take out the balance of the loan.
Right.
Worst case is we overborrow, create a forward transaction, overborrow.
Yeah, that's
put
good.
that money on deposit, and that way you're not afraid of the corporation not being able to make its principal and interest payments. Okay, two things happen.
Is that like an interest reserve, by
It's
the way?
interest reserve,
Okay.
yeah.
Right.
Forward transaction, same. So,
I love these
so he
technical
says-
terms.
Yeah, he says,
Forward
he
transaction.
says, okay, well, let me run it up the flagpole. All right. So he comes back after about a week, and he said, well, everybody in underwriting really loved this.
Okay.
I said, oh, well, fantastic. You sure it's not too big for you? He says, oh, no, it's not too big for us. We've got some sister banks, and we could participate it out. And I said, and so your answer is? He said, well, we don't like the idea that we're lending ourselves money to pay ourselves the principal and interest. And I said, where'd you get that idea? He said, well, we're we're lending you more money than
Overfunding.
you need. And I said, that's a reserve. That's not being used unless it needs to be used. Principal and interest will be paid on a regular basis for that 18-month period till it's paid off. But that's just to mitigate your risk so that you've got a comfort level. The company doesn't have a problem. This is the who's who of this particular community. You won't have a problem. And he came back and he says, oh, we saw that. We saw who these shareholders were. Wow, that's really a list. And certainly some of the key members can step up and provide guarantees. But let me tell you what our real problem was. And so you heard it here, folks. This is what he said.
There's a real problem.
We can't find a government guarantee program that fits this. I said, say that again? He said, we can't find a government guarantee program that... I said, you're looking for a government guarantee on a construction loan that is essentially paid for at closing by 60% of pre-sales for 85%. Your exposure is 15%,
right?
And you're looking for a government guarantee? He said, yeah, we spent probably 3 or 4 days calling and searching and doing all we could to find a program that would fit. I said, are you in the banking business? I said, that's the way I responded.
And
I said,
I know you've worked with a lot of
Are
banks,
you in the banking business?
Yeah.
I said, I've just when you thought you've heard it all,
right?
You come back with something like that. And he said, well, we really don't do anything without a government guarantee on it. I said, well, I can assure you that this is not one of those things this is a layup for you. And you've got credit, you've got equity, you've got pre-sales, you've got a 15%
exposure. Yeah.
How bad? I mean, are you really concerned about that 15% when you've got all the equity in this facility?
Right.
He said, I'm sure there's one out there. We just haven't found it yet.
Oh, my goodness. And
so he didn't understand the reserve. He thought it was money being set aside that's going to continue to. He didn't get that. I mean,
let's drill into that because I'm still a student of banking. Talk to us a little bit about it creating that forward transaction, if you can concisely. I know we want to keep this to 10 minutes or so.
There's a school of thought that. Sometimes you have to structure a transaction to mitigate the perception of the risk. You never want to have to go take a transaction, go back to the well,
right?
When it's already sort of dicey and slippery.
Yeah.
So what you do is at the front end, you instead of borrowing $10 million, you'll borrow $11 million, and that $1 million will sit in an account, and the borrower continues to make their principal and interest payments. However, if they run into trouble, then they can dip down into that $1 million and maybe get that extra time out of the calendar that allows them to get back on track.
So it's not part of the principal in the initial transaction. It's only accessed if and when it's required.
Precisely.
And it's isolated by escrow or however that works.
Right.
Okay. Thank you.
So it's a way to it's some call it a sort of an organic credit enhancement. Some of them call it a cash enhancement. Some there's all kinds of different ways you can characterize it. But the net end result is to mitigate risk when times get tough or you're really looking for just a little bit more time.
And here's a case where the bank was operating stupidly without a license, Lee, and that's unusual. And you've worked with a lot of banks, and you have seen a lot.
They are off the BH Capital radar. We will not be talking to him or his chairman anytime in the near future. I'll tell you. I when I got done with that conversation, it is official. I lost knowledge.
Oh, my God. This giant sucking sound of structured finance, folks. Unbelievable. BHCapitalLimited.com for more information about George Lovato Jr., the work he does with BH Capital, helping mid-stage, large stage, and helping with construction loans the way they should be done.
The way they should
be done. BH Capital Limited, that is
Capital
Limited Ltd.
LTD.
Yeah, thank you. BH Capital Ltd. He'll get it right one of these segments. Thank you for joining us on Stupid Without a License. I'm David Wolf with George Lovato Jr. Have a good week.